This is Ken Boyd with the Accounting Accidentally website, where you can find over 300 blog posts, actually 400 now, and over 400 links to videos on YouTube that I use to explain accounting. So what I wanted to talk about today is a topic that's poorly explained and a difficult one: consolidation accounting. So we need to first talk about who the players are. We have a parent. We have a subsidiary who's purchased by the parent. At least a percentage of the subsidiary is purchased. And then we have a non-controlling interest, or NCI, which is the entity that owns the percentage of the company that's not purchased by the parent. So, first step, parent buys 80% of subsidiaries' common stock for cash. So what's the entry on the parent's books in blue? Well, the parent sets up an account called investment in subsidiary, pays $316,000, and credits to reduce cash to recognize the purchase of 80% of the subsidiary. So what is the value of the non-controlling interest, which is the other 20% of the company? Well, we can back into it, because if we take the 80% paid by the parent, 316,000 cash paid divided by 80% that was purchased, we back into a value of the entire company being 395. The difference between what was paid, 316, and that hypothetical total, 395, is $79,000. That's the value of the non-controlling interest. Now we need to compute something called the differential. And this is a difficult concept. I found this is the best way to teach it. So here's what's going on. We have the fair value of the consideration. You know, you've seen consideration as a business law term. $395,000, what is paid for the company by the parent plus the NCI, the non-controlling interest payment. Hypothetically, $395. Okay. What are we buying? We're really buying the book value of the assets acquired, which is also the equity section of the balance sheet for the subsidiary. That's what's being paid for. So in my scenario, common stock, additional paid-in capital, retained earnings, we add all that up. That's the book value of the assets acquired, $350,000. You're buying the equity section of the balance sheet. $395 less $350 is $45,000, or a differential. And what does the differential mean? Well, it really can be applied to two different areas. It's also important to know that in consolidation accounting, there is not an account called the differential. That does not exist. Instead, this $45,000 gets assigned to one of two places. We adjust the fair value of the assets purchased, actually assets and liabilities. So some of the value will be assigned to specific assets, and anything that we pay above the fair market value of all the assets, we assign to goodwill. So let's show you how that works. Here again is the fair value of the consideration at the top, total value of the company. Here at the bottom is the fair value of the assets, $350,000, right there. The difference between these two numbers, top and bottom, is the $45,000. And the question is, how do we account for the $45,000? Well, in my scenario, we have inventory and a building, both that have fair values over book value. And I'm going to say that that total is $20,000. Inventory, building, $5,000, $15,000, $20,000. So a portion of the $45,000 goes to higher fair market values assigned to inventory in the building. What's left, the amount over fair value, which is what I have in brown, gets assigned to goodwill, the other $25,000. What we're saying is that the parent wanted to buy the subsidiary badly enough that they were willing to pay more than the fair value of the assets. And you'll see lots of balance sheets that have goodwill on them, and that goodwill is amortized over time. So what we've talked about here is consolidation accounting, parents, subsidiaries, non-controlling interests. We've calculated the differential. And then finally, we allocate the differential based on fair value of the subs assets, subsidiary, and we've allocated it to goodwill. One other thing I'd like to mention, you can join me in conference room. The address is up here, which is a free accounting community where you can see live chats, blog posts, videos, all connected to accounting. It's a growing site, and you can join here for free. Thanks for watching, and we'll see you next time.